Hello, undisputed trader. Today I want to talk about liquidity sweep. You understand? It is one of the important concept in trading because, of course, you can use it to spot your reversal. You can equally use it to spot your entry in the market, right? But then a lot of new trader and amateur trader they found it difficult to find this setup on their board on their chart rather. So today I will show you on my board how to find it. I'll demonstrate it for you, and so that you can equally replicate it. You understand? So basically, we have two type of liquidity. We have the buy side liquidity and we have the sell side liquidity. You understand? So the sell side liquidity, this is it presented on the board. You understand? Liquidity is in a simple thing, pending order. It could be stop loss, it could be limit order, and all of that. They are resting liquidity at any swing low and swing highs. So price tend to take it out before it to reverse to any direction that it want to take. You understand? So the idea is that once the buy side liquidity, which is this guy here, is taken out, price tend to move towards the downside. You understand? The moment this particular high, you understand, is taken out by this high, the price tend to reverse towards the downside. And the majority of traders love using it because sometimes you may not have your refined order block in the market, and this could come handy in the market and help you to find your direction in the market. You understand? So typically a buy side liquidity takes out the buy side or the swing high, and boom, it starts reversing towards the downside. So let me show you what the sell side liquidity looks like. Sell side liquidity sweep rather, sell side liquidity or and the liquidity. This is the liquidity itself. Let me show you practically. This is the liquidity itself, right? Understand? This is the liquidity itself, and this is the sweep. You understand? This particular guy here, the moment it takes it to the upside, it takes out this particular high, it becomes the sweep. So this is the liquidity sweep. You understand? This is the sweep, right? This is the sweep. You understand? And this is the liquidity. This is the liquidity which I told you already that these are the pending order. Are the pending order, right? You understand? Liquidity, right? So these are the liquidity. So let me show you how the sell side liquidity looks like now. So this is the typically the sell side liquidity. This is how it looks like. So just like I told you, it is the opposite of the buy side liquidity. You understand? This one is already focusing on the swing low. So the moment the swing low is taken out by this push towards the downside, you see what happened. The market starts reversing, and even if after it push back a little bit, could start trading towards the upside aggressively from any of the other block or the fair value gap, right? So this thing works 80% of the time. Now that you have the good understanding of how this liquidity sweep work, let me show you which of the liquidity seed is valid, so that you not just jump into the market and start finding any random liquidity, or you not just get yourself confused the more. So let me show you which one is valid and which one is not valid. Like you see here, so in our demonstration, I was using a line chart to demonstrate it for you, but here you can see that I'm using a candle now. So in this case, you see that the liquidity sweep happened with the wick, you understand? And the candle does not just close above this previous high, you understand? It does not close above it with a body. The body close within the range of this guy, within the range of this candle. You understand? The body close within the range. You understand? So that makes it a valid liquidity sweep for us, because of course after the candle wicks the liquidity out, it wicks this guy out towards the upside, he push back and close within. So this makes it a valid liquidity sweep, and price will likely push towards the downside to continue towards the downside. You understand? The moment you have spot your confirmation candle, it could be spinning up, it could be inverted hammer, any type of hammer, or it could be hammer. You understand? Any type of hammer, any type of confirmation candle that you love to use. The moment you see it here, after the liquidity sweep, a valid liquidity sweep, you can just jump into the market and trade it, right? So then let me show you where liquidity sweep is considered not valid. You understand? So in this case, you can clearly see it. This particular one is not a valid liquidity sweep. You understand? It is not a valid. And why is it not valid liquidity sweep? It is not valid because the moment the price push towards the upside and take this particular guy out, you understand, it does not close back within the range of this candle. You understand? It does not close back within the range of this candle. It does not close back. So it closes above with the body. And this is not the type of liquidity sweep that we want to risk our hard-earned money on. You understand? Because in this scenario, this is already considered as a break of structure. So you see the market 90% of the time, you see the market do a little retracement to any of the other block right here or fair value gap, and boom, you see the market even pushing further ahead to break more structure. So you want to stay vigilant. You don't just mark any random place as your liquidity sweep. You understand? So let me go to my chart real quick and show you a couple of examples that this thing actually exists in the market. Look at this beautiful example right here, right? Look at this beautiful example. Let me show you real quick. I hope you can see my screen very well. Look at this example. This has been a swing low, right? You understand? And the market push back, return to it, take out the low, you understand? Take out this low with the wick of this candle. And look what happened. The market don't just close within below the low of this guy. It closed back inside, making it a valid liquidity sweep. So you can trade from this liquidity sweep even when you cannot even actually see a nice demand level. But with the help of your liquidity sweep, you can easily trade this thing and you have a nice uh, risk to reward. You understand? Can target maybe 1 to 2. Yes. I can target easy 1 to 2 from this level. Let's say you enter from the, I don't know what is wrong with this candle. You understand? So look at it. You can enter from here, right? Enter from here. 47 pips. You understand? That is 1 to 2. Clean 1 to 2. You can easily reduce your stop loss a little bit, put it below here, and target this level. You can get a reasonable pips from this market. 47 pip is not a small feat because on average, you know that JBP USD, Euro USD average move like maybe 50 pips on average on a daily basis. The only time you could actually see 100 pips and above is when there's a much volume in the market. You understand? But the rest of the days, majority of the time, most 20 pips, 30 pips, 40 pips, majority of the time are 50 pips. You understand? So let me go further and show you another place that you can equally spot this liquidity sweep. You understand? Let me show you another clean example again. Look at this sell side scenario now. Look at this sell liquidity, sell reversal signal. You understand? The moment the price take out this buy side liquidity, what you see here, the price return into this level and close with the body within the range of this previous candle that forms the high. You understand? So the moment this candle close within it, it shows that boom, you are going towards the downside, and you can equally drill down to the lower time frame and find your state of delivery change. You understand? Change in state of delivery rather. So you can easily use this thing to target once this liquidity is taken out, once this sell side liquidity, buy side liquidity is taken out. The next liquidity that you are going to target is the external liquidity, which is this guy right here. You understand? The external liquidity, you can target the external liquidity as your take profit. Easy peasy. You understand? So this is how to do the market. This is how to analyze the market in a logical method. You don't just go into the market doing things randomly. You understand? And this thing, it can spot it on the higher time frame. Like I'm using 4 hour profiling to analyze this concept, but on the daily time frame, you can equally build up a nice liquidity sweep. You can build up your bias using liquidity sweep on the higher time frame, like the weekly and the daily. It is not limited to only 4 hour time frame. You can use it in higher time frame, 4 hour, daily, any time frame at all. Even on the lower time frame, you can use it for your entry. So this is where I draw the curtain, and I'll see you in the next lecture or in the next video. Thank you. Peace out for now.